Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Monday, June 11th, 2007, and the market's closed. The S&P 500 spiders did close up 31 cents, or about 0.21%, to add to Friday's gains after the bounce back from the sell-off we saw earlier last week. And you can see that the volume is significantly lower today. So that's something to keep an eye on. It's just showing us that the conviction of the buyers on this bounce isn't quite as strong as the fear of the sellers was on the way down, and that might leave the market vulnerable. And as I was saying last week, that what I was hoping for was a rally up towards about that 5-day moving average, which also comes into play with about the 50% retracement of this sell-off. If we take the high right here at about 154.5 down to the low right now near that 149 level, half of that range comes in right here at about 151.75, and that's where we did see the market rally to today. We saw a little bit of afternoon selling, and we've also got this declining 5-day moving average, which leads me to believe that it's just a bounce within this intermediate term downtrend. So I still believe that we're on track probably for a test of the lows, maybe probably like Wednesday or Thursday, I don't know. Options expiration could change things around a little bit, but typically I would expect a retest of those lows, maybe drive a little bit lower down through that 50-day moving average and steal a bunch of stops before the market turns back around again, and then just kind of settles into a range-bound type of market. We've had a great sustainable rally. Now it's time to work that off a little bit, and I think we're going to get a little bit of shocks in here, but I think generally we're going to see a more neutral type market. You can see here that we still remain under the 10 and 20-day moving average, but the 10 is above the 20, the 20 is above the 50, and they all, well, the 50-day moving average still advances. So generally, I'm not looking for any kind of big top or anything like that. Just a retest of the lows, and so far we're getting a bounce, and the market is behaving okay. The Nasdaq 100 also declining 5-day moving average here. Tells me that it's most likely just a bounce, that we'll see a retest of the lows. And let's take a look at some Fibonacci in here. We take the recent high from June 1st down to these lows on Friday morning. You can see that we retraced almost exactly 2/3 of that move right in there. So we've also got that rejection from the 5-day moving average after leaping above it. So this market could be a little bit more vulnerable. I think that rallies up towards 47 or so, you want to then look for an area where potentially you could get short. Don't sell short, that is, on the rally, but instead wait for the market to roll over before you decide to get short. The semiconductors had been holding on for most of the day in positive territory, but at the end of the day kind of gave that up, you can see here, and pretty much neutral day for the semiconductors. But on the daily time frame, we did get a nice shakeout below that 36 level, like we were looking for last week, and 35.5 did hold a support. Now we've got a market that looks like it's stabilizing just below that declining 20-day moving average, and on the weekly time frame, again, we're at a very significant level that if we're to break back down now through that 35.5 level, I think there could be bigger problems for this market. So we'll continue to keep an eye on that, but generally I think I'm neutral on the semiconductors. You could make a case, I suppose, that on the 10-minute time frame that we've got a big-headed inverted head and shoulder pattern, which would measure up a little more than $1 if it's to break out past there up to 38. I kind of don't believe that right now, but you want to leave all your options open and be aware of whatever possibilities there might be out there. The IWM Russell 2000, this market, as you know, we've been looking at this one as because the 83 level has been very important for this market over the last several months, and this market was up just 4 cents. So very small gain in here today. Not really much conviction in the buying. Look at the volume drying up in here as well. So the 83 level, again, we've got a declining 5-day moving average. This market looks a little more vulnerable to me just because the power of the bounce really wasn't that strong. If we take a look again at the Fibonacci from the June 1st high to this low, we didn't even make it to the 50% retracement. Instead, it found resistance almost exactly at that declining 5-day moving average. So overall, I think we need to continue to be very cautious on the market. I will have another video with stock ideas, but I'm not going to give any specifics, and I'm not going to update the stocks I mentioned yesterday either.